Good morning, everyone. This is Daily Trading Analysis with the weekly recap for the week of the 26th. This is the last week of the year, the last week of December, and we got a little bit of surprises. There were no news in terms of fundamental analysis, just regular activity, initial jobless claim, Chicago Fed. We are going to go through all that, but the main reason you have to keep watching these weekly recaps is because today I'm going to explain you why we sold off the way we sold off. So stay tuned because we are going to review from the fundamental analysis to the technical analysis from top to bottom, starting with the monthly all the way to the 1 minute chart to really see my trades as always, and also some other trades that some friends of mine took that were quite interesting. And with all this information, I hope you can review, you can do your own analysis and be prepared for next week, the first week of January, with the batteries recharged and started a new year with a bunch of information to be prepared for the new trading season. So first, the fundamental analysis. On Monday, there were no news. On Tuesday, we got the Fed National Activity Index, still super relaxed, 0.03. Instead of home sectors, look at this, month over month, a little bit of increase, year over year, continuing higher. So home sector is still hot. The people I think are starting to buy new homes now that the pricing are decreasing, but also increasing year over year. But they want to take advantage of the lower interest rates in the mortgages. So I think this is a spike, but the price is still there. Price in the home sector are continuing higher. Wednesday, no news. Thursday, initial jobless claims came higher than expected, more claims than were the consensus, 210,000. And in terms of pending home sales, the pending home sales, not the new home sales, took a dip, minus 5.2 month over month flat. I think the last month of the year, few people are moving to new homes. So basically on Friday, finally, Chicago PMI came lower than expected. We were expecting from 55 to 51, still above 50, which means expansion, but look at this, 46.9. This is one of the reasons I think people are starting to think maybe the economy will take a bump next year. So more reasons to take the money out of the market. In terms of the path moving forward for interest rates, we can see that the path is still intact. Markets are still pricing in quite aggressive interest rates cuts from 5.25 right now, starting cutting in March 2024, more than 1%, 1.25% to finish the year even at 3.75. That's super aggressive. Each FOMC, it's an FOMC of interest rate cuts. I don't think if this is going to happen. This is what the markets are expecting, and this is quite aggressive. That's why we are being bullish and bullish and bullish. But the last day of the year, something interesting happened. So let me show you a couple of interesting things. First, we are going to start with the monthly chart on the NQ continuous chart. Remember that we have analyzing the continuous chart with back adjustment, because if not, you don't are able to see the all-time highs that we are all watching. If you look the front contract, you're not going to see that, and if you uncheck the back adjusted, you think that we are an all-time high, but we have to adjust for previous pricing, and this is the all-time highs. This is what everyone is watching. This is the monthly, and as you can see, we are still stepping up towards that. We got a nice monthly candle, and there's still plenty of opportunity for that. People were thinking that perhaps we were going through that before 2024. I think that's quite aggressive because there's quite a lot of space until that. it's 4%. And I mean, Nasdaq is able to do that, but maybe you have to start thinking about that at some point people will start taking profits. So interesting price action. Let's move to the daily, because the daily, it's even more interesting. We got, in previous videos, I mentioned this fair value gap that was respected back then. Here, this is the daily chart, and we tried to cross, but then we came back in. And quite interesting, because on the weekly, we have also that kind of pattern. We have this fair value gap that we are in on the weekly time frame. So be careful at this zone, because everyone is watching to break through this, but it would be nice to have a pullback, feel some of these inefficiencies, and then go higher. That's the usual way to get this beautiful pattern, and then the push. So I'm waiting for that. I'm in no rush. I have a lot of patience to really wait for that. But let's focus on the current contract and what happened throughout the week, because it was quite surprising for some people. And I think, let's go to the 1 hour chart. We broke this, and on Wednesday we chopped, on Thursday we chopped, and we have some space up here at this zone that I was basically watching. If we are bullish, we are going to destroy that. That's always the case. I have my levels, and I'm waiting to see if we are bullish or not, because we have nothing up here. We have no reference, and we have to be prepared for anything can happen. I was bullish on the week. Just check my videos. After doing this, I think we were going at least a little bit higher. But let me show you some things that started happening during pre-market on Friday, because there's no other day more interesting than Friday. This was the pre-market action. Look at this. This is a huge spike into what? This is the London Open. I mark always the London Open low here as liquidity. And let me show you where did we stop. I was watching also this liquidity from the day before, from Thursday. And let's check on the 50-minute chart. I always check my pivots and my liquidity levels on the 15-minute chart. So basically, this was one of the things that I was watching. If they want to continue higher, they want this liquidity taken and then trap them. But we never went there. We left this 5-minute fair value gap in here from Thursday intact. 1, 2, 3. So I was watching that, and then 4. So we took that, we tested that fair value gap, and we started to do the inverse, respecting the various fair value gaps and not respecting the bullish ones. So this is the first sign that something was happening. We took this liquidity down here, we took this, and then on this fair value gap, we dump it lower to pre-market lows and beyond. So at this point in time, we took yesterday's liquidity, and I was waiting for a move higher. Okay, let's see. We took all the liquidity from all the buyers from pre-market, and then what? What are we going to do? Are we going to start ripping higher? Can we take some positions? Well, up, down, up, down, up, down, up, down, up, down, and nothing happening. So there were accumulation here. Look at the box that I have here. This is the opening range on the 1 minute. And we tried to go higher, but again, another fair value gap being respected up here. So even though I was so bullish on the day, on the week, I was waiting for opportunities to go long, there were no indications from price action that we were going to go higher. And that's quite telling. You have to adapt. You have to be nimble. You have to be flexible in your bias. And even though I was so bullish, I was telling to myself, there's no way. We are expecting various gaps and we are taking liquidity to the downside. So perhaps we are going to the downside. This liquidity was the final push. And then the sell-off started. As you all know, I started charting to the downside. I have a lot of levels down here. That's one of the things that I noticed at the beginning of this huge move. There were on this liquidity here, and then this liquidity here, and then more here, and even more down here. But how much are we going to sell off? At first, I was watching this 30-minute fair value gap that we respected last week, and nope, that was not the case. So then I was just, okay, let's take a short. Let's just wait for our opportunity. This is just chasing price action. So I was waiting, inverse fair value gap. Sorry, because I deleted this. Let me just do it. So basically this was my trade. My trade was on this fair value gap being respected with the stop at the highs on this pivot and the target, my liquidity down here. So that was a 2 risk reward ratio more or less and 55 points. So I think I took it down here with a sell on the bid and that was all. It was 900 something. And so that was my trade. But then I was looking for a reversal at some point. How do you look for a reversal when these kind of 200, almost 200 points of sell-off? Well, you start looking things like levels being respected, for example, or big orders being held down here. There were 95 on the bid down here. There were 60 here. So this was, I think this was a nice level to see, this order block here. We tapped that and we started moving higher. We tapped and we left and touched this fair value gap bullish. That was the first time that we did that throughout all this sell-off. So this zone was quite good for that, but it's super risky on a Friday, last day of the year, after this huge sell-off, to just scalp for long. So I didn't take it. But let me tell you some of the trades that my friends took. This is the Nasdaq. They didn't trade the Nasdaq, they did trade Nvidia. So let's now go through all the individual stocks and see how they performed on the daily. So Nvidia, sorry, Apple basically rejecting the 50 simple moving average on the daily. I think this is quite telling. 1, 2, 3, 4, 5, 6 out of 7 candles in the red of the last 7 days. That's quite telling. I think Apple is going to trace a little bit more, perhaps this level around 190. Microsoft, the single stock, the only one stock that finished the day in the green. And they are pushing. They are pushing. I don't want to claim this an ascending triangle wedge pattern into all-time highs. This is what it looks like. But the thing is that there's a lot of pressure being put. They are being price is being held. That's the kind of insight you have to take from this. So I think we are going to, Microsoft is quite strong on the back of OpenAI and AI into 2024. Tesla, with the members of Congress trying to recall some of the cars. Look at this. This is quite weak. 6.68 in 2 seasons. Wow. Amazon, is just ranging here. It's in between these two levels, and we are almost in the middle. There's a lot of red, but this is quite seasonal. So Christmas could either go up or down depending on the results. So let's see what happens next year. Google, it's basically, I think, is targeting this gap to repair and then continue higher. This is just not a regular pullback at this level. It's obviously quite telling that they want higher pricing, but I think this gap is going to be filled somehow, even partially, to go higher. And Nvidia is just, it's just when it reclaimed this big, even though we finished in the red, look at this week. There's a lot of buyers wanted to trade the all-time highs at 500. Same as Microsoft. They are both hyped by AI. Before moving further to Meta, let me show you the trade that one of my friends took. So basically, same consolidation. They took the sell side. I think it was 300 shares at this fair value gap with the stop at this double top. And the target first liquidity. Where is the first liquidity? So basically it was here at these weeks, the day before. And then other liquidity down here, possible that they also took for an ad of 500 shares after confirmation of this sell-off. Again, another scalp with this very fair value gap into lower. So that was $3 and $3 and $3, 330 and 330. So basically 300 shares, that's 900 and 900, so almost 2,000 on these two trades on Nvidia. But the most telling thing is, look at this. This is an unbelievable pull. A lot of people bought Nvidia app on the last day of the month and on the last day of the year. Look at these buyers. We went almost to all-time highs. Sorry, to high of day down here. At the close, it was going lower, but let's see the volume. Look at this volume, these pushes. I mean, be careful with Nvidia if you want to short, because you have to take advantage of these days. And even though we have these days, look at the response from the, oh my God. And then finally, Meta is struggling up here at 360 from September 2021. So if we take a step back and we see where are we, look at this. We are at extreme zone. Obviously, this is the all-time highs, 384. This is also really near, but be careful because I think a pullback has started. Look at all this red. And we have to really see the price action to confirm if we want to go higher or not. We are again at this fair value gap on the daily range, right in the middle, a little bit of buyers here. So what is my expectation, my forecast? So if this is the daily, let's go. All this liquidity got taken. So basically all these, I think this is quite important. All these can be gone. Let's clear chart. So this liquidity got taken. This 30 minute didn't hold. And now that this got taken, we have to really see this inverse here. This is the 1 hour. So let's claim that. This is the first thing I'm gonna watch next week. This is the first thing. If we clear that, then we have another one that got tapped. This one is even better because basically got tapped here and we have confirmation of that one. In terms of fib retracement, this is a 7. Now let's check the entire range, the entire sell-off. So this is on discount and this is also on discount. So both are, this is in the golden pocket. Look at this beautiful retracement. On the golden pocket, 61.8. So this is just confirmation that the sell-off is legit. I think this sell-off might continue. So we have then these targets down here. And we have to adjust for last week. The last week low will be adjusted. So let's do that right now. So we have last week low. It was this, and then this is in here. I'm not going to watch the upside until we have confirmation that we are clearing these two fair value gaps. So basically that's the plan, to see how we open. If we open lower, there's a huge fair value gap here, and we have this. This is the last resource for shorts. If we start climbing up here, I will be watching for a really surprising squeeze to the upside. But I think based on the liquidity that we have down here, there's a lot more potential for a bigger pullback down here to take liquidity and then start moving higher if we want the all-time highs. So basically that's the forecast. In terms of the dollar got a little bit of buyers, but look at this. I was charting the dollar and this was crazy. Move up, move down, move up, down. And this was only in pre-market. Then when the market opened at 9:30, it big upside, big downside, and then it finished strong. So this push on the dollar and the fact that it's basically after all this sell-off, it's on a demand zone. I think dollar has more potential to the upside and is converging with the fact that I'm expecting Nasdaq to continue lower for the liquidity hand to the downside. So watch dollar also. It was not super interesting, not super telling on pre-market, but into the open, it went higher and higher and higher, and it was quite strong. 0.17 for the DXY was quite telling. We have liquidity up here. Let's see what happens, but Nasdaq forecast is to the downside, dollar to the upside. That's correlation. And then we have the small caps. And small caps, I was also charting that because I was expecting this bullish fair value gap to hold, and this was the first sign of weakness. Weakness started quite soon on the Russell, and we continue lower and lower and lower and lower and lower. And the Nasdaq took a big hit due to that. We got the liquidity on the 30-minute. We got this one, and then we never touched that one. So when I started to see this basement, liquidity down, big push up, this was the fair value gap that I was waiting. This liquidity never was taken out, and then we started to slowly go higher. But this was not the reason why the Nasdaq did some kind of push into the middle to finish 0.40. Remember that on the daily, the Nasdaq has some buyers down here. Some buyers down here on this week on the daily. But the main reason is because Nvidia was bought up like crazy. Look at this move. So watch Nvidia. Watch also Microsoft that finished in the green, the only one finishing in the green, and both are AI leaders. So if there's only one reason why you want to buy Nasdaq next week, and it's because AI mania. If Microsoft and Nvidia continue to be strong, they can carry a little bit, but the rest are super weak. So we are going to see more chop days like crazy. So be careful. Watch dollar. Watch small caps. If they also provide some correlations, you may have an edge for next week. And I think that's all. Pretty interesting last day of the year. Pretty good damn year for me. I hope you have also a really big year, and I'm waiting for you in this channel. I'm expecting for you to continue watching my videos, to continue supporting the channel. I will continue sharing my ideas, sharing my experience and my analysis with you guys. So if you want, this is your home. And that's all from my side. As always, if you found these kind of videos useful, please give them a like. This is a lot of effort for me every single week. So thank you for the views, thank you for the subscribers, and I hope you had a pretty good damn year. If you are in the red, don't worry, you always get experience trading this market. Adjust and then improve. That's the cycle that will make you success. And also be patient, be nimble, be disciplined, and manage your risk. Those are the key for your continuous success. Stay safe, everyone. Have a nice weekend. Have a nice New Year's Eve and Happy New Year 2024. And see you next week.